Hey guys, welcome back to Trendy Gadget. Today we'll talk about how Netflix misses its growth forecast. Let's head into it. Netflix shares tumbled in pre-market trading Friday after the streaming video giant posted disappointing subscriber additions for the fourth quarter late Thursday, along with first quarter guidance that fell shy of Wall Street expectations. The results raise fresh questions about the company's ability to grow, given a nearly saturated market in the US and Canada. The stock was down 19.4% at $409.87 Friday morning, after dropping 1.8% in regular trading Thursday. For its fourth quarter, Netflix added 8.28 million net subscribers, a bit shy of the company's own forecast of 8.5 million net adds, but about in line with the Wall Street consensus forecast at 8.3 million. The company now has 221.8 million subscribers globally. Netflix's projections for the current first quarter were even lighter, is projecting 2.5 million net adds versus analyst forecasts of 5.5 million net adds versus analyst forecasts of 5.7 billion. That's going to exacerbate concerns that the company's business is maturing. In a letter to shareholders, the company said its guidance for the quarter reflects a more back-end weighted content slate for the period, with a new season of Bridgerton, for instance, scheduled for March. Netflix also said that customer acquisition growth has not yet re-accelerated to pre-COVID levels, adding that this may be due to several factors, including the ongoing COVID overhang and macroeconomic hardship in several parts of the world, including Latin America. Even in a world of uncertainty and increasing competition, we're optimistic about our long-term growth prospects as streaming supplants linear entertainment around the world, the company said. We're continually improving Netflix so that we can please our members, grow our share of leisure time, and lead in this transition. Netflix said that average revenue per membership was up 7% from a year ago, 2 points better than the September quarter. Operating margin was at 2 points better than the September quarter. Operating margin was at 8%, down 6 percentage points from a year ago, but slightly above the company's forecast of 6.5% due to slightly lower than forecasted content spend. Netflix said it didn't buy back any stock this quarter, using cash instead of funds its previously announced acquisition of the Roald Dahl story portfolio. The company generated fourth quarter revenue of $7.7 billion, up 16%, and in line with the company's projection at $7.7 billion. Profits were $1.33 a share, well ahead of analysts' forecast at 83 cents, with the outperformance mostly due to an unrealized gain tied to the company's euro-denominated debt. Netflix sees first quarter revenue of $7.9 billion, up 10.3%, but well shy of the street consensus at $8.2 billion. In a post-earnings conference call, Netflix execs conceded that competition might be playing some role in the slower growth, while also noting that cross-currents from the pandemic remain an issue, with growth still being pre-COVID levels. Chief Financial Officer Spencer Newman said on the call that churn was down from a year ago and that viewing hours remain strong. He said it's tough to say why the growth has slowed, and theorized that in part it could reflect a bit of overall COVID overhang after 2 years of a global pandemic. Netflix is targeting a 2022 operating margin of 19 to 20%, down a hair from 20.9% in 2021, including a 2-point negative hit from foreign currency. The company said it expects to be cash flow positive in 2022 and beyond. Netflix finished 2021 with $15.5 billion in gross debt, a little above its target range of $10 billion to $15 billion, and noted it will pay down $700 million in senior notes in the current quarter. Netflix added 1.2 million net adds in the US and Canada in the quarter, up from 900,000 last year, in its best quarter for domestic growth in a year. Performance was mixed in other markets. In the Asian Pacific region, the company added 2.6 million net new subs, up from 2 million a year ago, with strong growth in India and Japan. In Europe, the Middle East, and Africa, the company added 3.5 million new subscribers, down from 4.5 million a year ago. In Latin America, net adds were 1 million, down from 1.2 million a year ago. Netflix noted that it launched mobile games on Android and iOS devices in November, and that the current slate is up to 10 games. It's still very early, but across both casual and core gaming genres, as we continue to program a breadth of game types to learn what our members enjoy most, the company said. Last week, Netflix quietly ratcheted up subscription prices in both the US and Canada. In the US, a standard subscription, which includes HD quality video and the ability to stream to 2 devices at the same time, is now $15.49 a month, month, up from $13.99. Basic service is now a month, up from $13.99. Basic service is now $9.99 a month, up from $8.99. Premium service, which allows for 4 simultaneous streams, jumps to $19.99 a month from $17.99. The company also recently reduced prices in India to stimulate demand. Netflix said that the US price increase will be a factor this quarter. Newman also noted that this revenue guidance for the fourth quarter reflects about a 4 percentage point currency hit. The company said in its shareholder letter that the competition may be affecting our marginal growth some, but that it continues to grow in every country and region in which these new streaming alternatives have launched. In the letter, Netflix also said that its board has decided to make some changes in its corporate governance structure, including declassifying our board, removing supermajority voting provisions in our charter and bylaws, and enabling shareholders to call special meetings. What do you think about Netflix's growth? Let us know in the comment section. This brings us to the end of our video. I hope you enjoyed it. Hit like if you did, and don't forget to subscribe to our channel so that you don't miss any of our videos in the future. Also, watch the 2 videos that are on your screen because I'm sure you'll love them. With that, I'll see you in the next video.